All right, guys and gals, weekend's over. Let's make some money this week. Boy, markets are bouncing around all over the place right now. End of the month, end of the third quarter. But I'll tell you this one pretty obvious clue on these charts that are telling us why the markets are bouncing around. And more importantly, that traps, bull traps, bear traps, traps are probably where the money is made. Got that big non-farm payroll number coming on later on this week. And don't you worry, I've got some great trades on my radar for tomorrow. By the time we're done tonight, we'll cover the entries, the exits, and everyone have a roadmap to make some money on traps tomorrow morning as well. So enough of the intro. Charts are all ready to go. Glad to see you with me here tonight. Let's go make some money on what should be a very busy session tomorrow morning in our trade room. Nasdaq triple Qs are in front of me. Oh, the Emini and the SPY is ready. I have two very important clues on my charts tonight that are telling us where the money is made tomorrow morning. One of those big clues is right here on these hourly, these 60-minute time frames. It's easy to see we're bullish overall on the S&P and SPY. We're bullish overall on the Nasdaq and the triple Qs. I like to use these higher time frame charts as somewhat of a directional filter. It tells us what direction momentum is moving overall. But the one downside about these hourly charts is they don't help us time the entries. I have one, I think, more important clue on some faster, some tick charts that'll help us take this overall bullish direction and time some beautiful entries for tomorrow as well. And before we jump in though, and talk about entry tactics for tomorrow, let's check schedule for tomorrow, because tomorrow is, well, first of all, it is the beginning of a brand new month. And we know that anytime we transition from one month to a new month, we always expect volatility to kick up a little bit. So expect volatility to be a bit higher next couple of days here as we turn into the month of October. But the most important thing tomorrow is we got some big news reports coming out at 10 o'clock Eastern time, mainly that JOLTS report at 10 a.m. The Fed, the FOMC, has told us many times inflation is no longer their big concern. The jobs market, the employment situations are their big focus right now. So JOLTS report, along with ISM manufacturing, are definitely on my radar for tomorrow. The biggest news of the week, of course, is that big non-farm payroll number coming on Friday. We'll talk about that as we go deeper into the week this week, but keep your eyes on 10 o'clock Eastern time. That's the big catalyst for tomorrow. But let's get back to our charts though, because it's good to know when the news is tomorrow, but the money is made. The entries we find are coming off the charts in front of us. I mentioned earlier, we're bullish overall here on the hourly, but again, we're not going to use these hourly charts to time entries for tomorrow. I like to use tick charts to time the best entries. This, by the way, is a 7,000 tick chart. All the time frames you'll need in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. This is the 21 EMA. It is pretty much the only indicator we use to find lots of winning trades each week. There's one really important clue on this tick chart, and that is that trading range right in the middle. Now, ranges. Two things you want to be aware of when it comes to ranges. First things first, ranges act like magnets. Second, they love to rotate. Down, up, back and forth we go. So if you understand how ranges work, and you look up top here, we're right around that all-time high right now. That range below us as a magnet, all-time highs overhead. I would love to get some bull traps off the high and then buy it with some bear traps off of that low. So for example, my favorite trade for tomorrow, now bull traps are simple. As we go lower here, look for buyers to come in and start buying into this as it goes lower. I'll be watching above these prior swings, looking for what is a classic technical bull trap pattern like I teach in our free video classes. It'll be a move right above one of those prior highs there. Strong red candle, close below the 21 EMA. That, my friends, is a bull trap pattern. Now remember, ranges want to rotate, right? They want to rotate back down and then back up again. This is now where some bear traps come in handy. Now remember, we're an overall bull market on the 60-minute time frame right now, so I can be a little more aggressive on the entries down here. When I say bear trap down here, what I'm actually looking for here right now is I would love to get one of those 1, two try failure patterns. Now think about this. Is this a good place to be selling? Of course not. We're overall bullish in the 60. We're below a range, acting as a magnet. If I can get some rookies chasing after this, now I know where their stops are, and I can use their stops to fuel that move going higher. Like back here today, run lower, bears once, bears twice, and squeeze those stops running higher here. I would love to grab a failure pattern like I teach in the free video course. Now remember, ranges love to rotate. So if we wind up running higher here now, this is where a technical trap pattern will always come in handy. Now, technical trap patterns, watch closely. I want to see a shallow pullback. It'll barely miss the moving average, a higher high in price, and then get right underneath that prior swing. In the trade room, we call these failure into trap combinations. Failure into trap combinations. Run lower, 1, 2, 1, 2, failure into up, shallow pullback, higher high in price, trap combinations, rinse and repeat as we go. So again, it'd be a technical bull trap above a prior high on the short back down again. Then that 1, 2, trap those bears in, that failure into that higher high in price, and that technical bear trap off the low. Again, the key is that higher high, move right below that low. But maybe I'm wrong about this. Maybe we don't get that bull trap off the high. If we do end up rolling higher, what I'll do is start looking left and looking for basically a breakout pullback. If we can break through this pendulum swing, you'll notice how I've measured the amount above, the amount below. This is a bunch of resistance right now, which sets us up for a bull trap back down again. However, though, if we keep going higher here overnight, now we have a lot of bullish momentum, bullish proof now of a range breakout. This is where what I can do is start looking at the top of that trading range and using that as a breakout pullback. Now, when I say breakout pullback, I want you to think about a two-legged pullback. What's a two-legged pullback? It is just like it sounds. It's one leg, it's two leg. Now, when I say two-legged pullback, think about a measured move that goes a bit too far. So if we keep on pushing higher here overnight, if we don't get that bull trap off the high that I mentioned earlier, we then look for basically a breakout pullback off that trading range. And to do that, I want that two-legged pullback a bit more than a measured move. And by the way, I'm not going to pick a bottom on this, right? I'm not going to blindly buy that because it may keep on going all the way back down again. And if it does, by the way, I'm going to talk about how to trade this in a moment. If it does go up and fall apart on us, I will give you guys a roadmap to profit on that here in a moment. However, what I'd like to do here is wait now for the pull back to the moving average. Again, I don't know how far this thing will pull back. It may pull back a bit lower. I don't know. My crystal ball doesn't work as well anymore in these markets. All kidding aside though, this is now where I can use that same failure to trap combination. Bears once, bears twice, trap those bears in. Why? Because again, I want their stops. I want those stop losses right here. I want those to get hit, right? Because if you're caught short on this and you get stopped out, it'll squeeze those stops. Only option now is to buy your way out. So sellers turn to buyers when they get stopped out. And again, think about this now, as it rolls higher, the buyers want to go back and take out that high, right, in this situation. So as it goes higher here, don't chase after it. Wait for that shallow pullback, that higher high in price. Again, it's always going to be, look over here, right? It's always going to be that technical trap pattern as it rotates back higher. So again, if I'm wrong about the bull trap off the high here, if we keep on rolling higher, don't chase after it, not into all-time highs. Look for that two-legged pullback. Use that range as a breakout pullback. And again, don't pick the bottom on this, right? Trap those bears in, 1, 2, squeeze those stops, and then grab that bear trap on the way back up to retest the high. Now, let's slow down for a second because we've covered a lot of my favorite trades here for tomorrow. And I know that most of you guys and gals gals watching right now, you know these patterns. You're making money on two-legged pullbacks, and you know why we love bear traps so much. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy you want to learn here right now. Don't you worry. I teach this entire roadmap. I have hundreds of examples of bear traps and failures. I teach so much more of this in our free video classes. What I'll do is I'll put a link up top here for you. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are waiting for us each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries and start making more money. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up. Take this free video course. Everyone loves the free video classes. Perfect for anyone who's serious about making money in these markets. And also be aware too, don't forget too, I'm going to put all the important links in case you can't get the link up top there. I'll put all the important links tonight in the description of the YouTube video. Start first on the free video classes. Everyone loves those. Don't forget too, we trade together every morning, 8 o'clock Eastern time in the members trade room. I'll put trade room membership links down there for you. And also I post a lot of updates on Twitter, X as they call it these days, charts, videos, mindset stuff. If you're on Twitter X, give me a follow. Again, all the important details you'll need to time better entries, learn more, earn more. It's all linked up in the description of this YouTube video. Now you know how I look for bull traps, right? Again, that lower low in price, that trap of the high, how we time the best entries with 2-try failures and traps back and forth. And in case I'm wrong on this, that breakout pullback as we go higher. Now, those are the simplest way I look for trades tomorrow. There are a lot of variations though of bull traps and bear traps. Let's talk about some variations now on the Nasdaq. Now, before we talk Nasdaq, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. That small action for you takes no time for you, but it makes a big impact on my channel because YouTube, believe it or not, rewards me every time you like, share, and subscribe. I know we're all busy people these days. I appreciate you spending a couple minutes every evening with me on these videos. So thank you so much for the likes, the subscribes, and shares. Thanks for your support. Now, let's talk Nasdaq. Nasdaq overall, you can see here, we are bullish, obviously here on the 60-minute time frame right now. That big move higher from last week is begging to get taken out overall here for the buyers. But again, these hourly time frames, they're not going to help us time the right entries. The tick charts are the secret to timing entries. This, of course, is a 4,000 tick chart, upper left-hand corner, the same 21 EMA. Look at how beautiful that range is on this tick chart. Range right in the middle. You've got the market rotating up, down, back and forth we go. And again, if this triangle rotation holds up here right now, we should be looking for that rotation back down again and then back up on the side of that trading range. On the S&P chart, I talked about how I would like to get a bull trap, which is basically buyers trying to buy this, getting that lower low in price, and a trap pattern like I teach in the free video course right above the high. Okay, now, that is kind of the gold standard of a bull trap. A very common variation of that bull trap would be what we call a V-top, right? A V-top reversal. For example, you'll notice I marked up the amount below, the amount above. We haven't quite taken out that pendulum swing that we have on the S&P. It wouldn't surprise me at all if we made one more leg going higher, run into that overhead resistance, and there was so many buyers taking profit up there, and with so many sellers waiting to short this thing back into that range, this may get whacked and run right back down again. In other words, we may not get that bull trap for that short, right? We may not get that signal for that short going lower. If that's what happens, if we wind up kind of V-topping off that low, I'll be watching for this entry pattern tomorrow morning. What happens most of the time is when it gets whacked off that top like that, is it begins to grind down on the chart. what'll happen is it'll separate off the moving average, start grinding down like that. These are very, very simple. Step one is don't chase after it. The worst thing you do is when it V-tops like that is chase after it. Your patience will usually be rewarded because what we'll do is step two, draw a trend line off those lows. Connect those lows with a trend line. Step three, mark that trend line as a channel up overhead. Now, look left. Find one of these prior swing highs that lines up with the top of that channel, right? Makes sense? What I'm gonna do is I wanna combine the top of that new channel along with one of these swing highs. In my experience, this is one of the easiest ways to make money as the market again tries to rotate back and forth inside of this range. And my trader might call these V-top reversals or a pop and grind channel. It pops down and begins grinding down. The key is don't chase after it. Find that trend line off the low, find that channel off the high, and don't miss that first test off the high of that channel. Now, keep in mind too, this could be any of the entry patterns you guys are learning in our free video class. It could be a trap pattern, look at me showing you here, a failure pattern off the moving average, a pullback combination. This might be a brand new language right now for you, but again, once you get into the video course, the free video class I mentioned earlier, you will quickly pick up on all these entry patterns. You'll start making more money because of it as well. So a V-top off the low. Now that same V-top off the high, I should say, can also be applied off the low now, right? So let's say, for example, now we do wind up all the way down at that low. I would love to get that same 1, 2, right? 2 try failure pattern we talked about earlier on the S&P. I would love to get that. But you know what though? Sometimes we don't get it. Sometimes these ranges, they rotate so hard back and forth like this, we may not get that 2 try failure pattern to time the entry like I want. If they V bottom off that low and really boing back up into that trading range, think about the same idea. If it pops up and begins to grind going higher here, okay, now you know. Step one, don't chase after it, right? If you have to, sit on hands, wait for the pullback. Pullback where? The low of that channel. Mark off that high, bring it down off that low, look left, find a prior swing, right? Look left, find a prior swing low. I want to get underneath a prior swing low. This is where bear traps live, below prior swings. Get below the 21 EMA. That's where failure patterns live. Under the 21 EMA, failures into pullbacks, pullbacks into strength move, right? So trap, failure, pullback combo. Again, a lot of examples of those. In fact, probably hundreds of examples of those now at this point inside the free video course. And remember, where's the market want to go? It wants to rotate, right? It wants to rotate from one side of the triangle to the other side of that triangle, right? Makes sense, all right? So that is a variation of that bear trap down there that I'm watching for. And kind of one final variation of this, we oftentimes see what are called double bottom retests, right? Which basically means as we go lower, we'll oftentimes get the entry down here. We'll get a 1, 2, we'll get a nice winning trade, right? Off of that bounce off the low. I always look for a 1-to-1. So size of my stop, size of my first target. We'll talk about trade management more in the free video course, but this will be a winning trade. But we know that ranges, right? They love to break out pullback. So oftentimes if they roll lower on strength like that, what will happen is buyers will take their profit off at the underbelly of that range. The bears will come in and they'll run this thing back down again. Now, when they retest that low, the way I see this is a gift to the buyers, because anybody who sold on that breakout pullback, where's their profit targets? It's probably back at that low. Is this a place to sell short? Of course not, right? Not an overall bull market. We saw in the 60-minute time frame and a range above us at support. No, right? This is the last place you want to be selling. But I can almost guarantee you though, when I was a rookie, I would have chased that thing lower. I almost guarantee you there'll be inexperienced traders who will not be able to keep their fingers off the button. So same idea here, trap those bears in. Don't pick the bottom on this. It may keep on going a bit lower. I don't know how far it will go. What I do know though is once I start seeing bears try once and trying twice, Now I got you, right? Now you're trapped. And again, if you're trapped short and I buy right into those stop losses, right? You get squeezed out of those stop losses. Sellers become buyers in this scenario. And this is oftentimes what lights the fuse for that big run going higher. I always love double bottom retests like this because, again, anybody who sells up here, they're buying down here. All these sellers become buyers in this situation, which is it's no surprise why it runs higher, shallow pullback, higher high in price. Remember, if you want to make more money, add to your winners. Don't trade more frequently. If you want to make more money, trade bigger size, add to your winners, and hold your winners longer. You can easily add to your winners with this technique because now I'm already in off that failure pattern. Why not add a few more contracts right on the bear trap pattern? And again, adding to your winners and then letting your winners run. Where does the market want to go? It wants to go back and take out the other side of that range. So let that winner run, right? Don't cut that thing too early. Use that high, use that triangle, and then rinse and repeat. Bull trap off the high, and again, back and forth we go. And don't forget, once again, don't forget, if I'm wrong about this bull trap up here, if this thing keeps on running, right, if we do keep on breaking out here on strength going higher, we then use this trading range now for a breakout pullback, ultimately. And when I say breakout pullback, again, what I mean by that is a two-legged pullback, right? 1, 2, again, think about a bit more than a measured move. That ideally will line up right around these prior highs, right, for a key area of support. I'm not going to pick the top on this, right? It may start grinding down as it goes. If it does start grinding down, what do? You draw a trend off the lows, up around the high, right? You know this already, right? If it grinds down, you short that first test off the high of that channel. Right? It's pretty simple, right? The key is don't pick tops and bottoms, right? Wait for the proper entry signal. But again, though, as they start pulling back here right now, if I start seeing bears once, bears twice here, higher high in price, now we know their stops are locked in. Now we can buy into those stops for that failure into trap combination I mentioned earlier. So if we do keep exploding higher, if we do keep going higher, the Nasdaq does have space for that all-time high up there. So plenty of space overhead on the Nasdaq. We'll see though if we can get to this pendulum swing and make that breakout above that 17 for tomorrow. So bull traps off the high, bear traps off the low, maybe a breakout pullback if we're lucky tomorrow as well. Only time will tell. Now, that's the plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to learn and trade along every morning in our trade room. Once again, I'll put all the important links you'll need to learn more, earn more, join the trade room, trade with us every morning. All the links you'll need in the description of the YouTube video. Hope you learned a bunch tonight on the video. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon trading with us in the morning trade room, 8 o'clock Eastern time, with all the members here at School of Trade. In the meantime, be well out there, be nice to each other, and be here next time. Adios, amigos. Bye for now.